presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man Al in Homosassa. What's going on, brother?
Isn't it wonderful? I went ahead and invested in your Tiger dollars, and I went ahead and got the gold report for a year, and also your morning, your call letter and stuff like that. And I got over a 50% return in one day, not counting everything else. But I just want to thank you. Tom's not perfect, but he tells you how to put your stops in, and he keeps your losses small. You can take your small losses, but then all of a sudden you'll be like Babe Ruth, and you'll hit a home run. I mean, a big home run.
Yeah.
And put the money in your pocket.
Okay, brother. You're awesome, man. Thank you.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We pick things up. Markets in positive territory, clawing back some of the losses yesterday. We get the S&Ps up by 0.8%. S&Ps up by 0.5%, trading at 58.90. We see the escalation from yesterday. We throw a Fibonacci on here, and you're talking about a bounce right at the 50% price level. That's also right where you chopped around before you got that second acceleration in the final hour of the trading day yesterday, 58.90 in the S&Ps. You take a look at the NASDAQ 100. As I mentioned, some of these tech stocks. You got Amazon charging higher on some of their AI news. You got Google as well, Microsoft, OpenAI, etc. NASDAQ 100. You're right back to where we were on the open yesterday, right? 21,322 right now. Dow up 180 points, trading at 42,125, and the Russell positive by 6. As I mentioned in the top of the update there, Bitcoin. You talk about a run. How about that, right? You talk about the pullback right to the 618, and boom, we're taking off to 112,000, man. Now that A to B leg takes you from about 52,000 all the way up to almost 110. So you're talking about, what, $56,000 leg about? And that would put you at about 130. Would it be the A to B, C to D? Let's run it out on Bitcoin. Whoop. Yeah, 131,000 would be the A to B, C to D. So it might have some legs. You know, you're breaking above this area that you consolidated in from November last year on Bitcoin all the way through February. You pull back and boom, we're breaking above that area with momentum, all-time highs. And yeah, how about the tokenization of equities? We'll talk about that later in the program. Let's talk some yields. The Journal has a piece in there today on the front page that the bond market's stabilizing. And yeah, you would say it is. You know, the 10-year's gotten back everything we had from yesterday. That's a move, man. Down 0.5 point, up 0.5 point. We're right back to where we were. The 30-year, the bond market. So even since yesterday, right? I mean, check this out. So even since yesterday, we were at 111.25 on the 30-year. We've bounced more than a full point, okay, from this morning. But you're still 0.5 point from where we were yesterday prior to that 1 p.m. auction. 10-year, you got it all back. 30-year can't get it all back. 30 years higher yields. And then you back it up like I was mentioning, okay, to the lows of December. The 10-year is right where you were. 30-year is well below, right? So we have lower price, higher yield on a consistent basis on the 30-year, especially compared to other durations right now. You're still above 5%, flirting with that number. Let's check it out, actually, because we're getting quite a bounce, as you're probably approaching about 5% right now. Yeah, we are at 5.05 on that 30-year, and the 10-year right now, 4.55. All right, as I mentioned, Google having quite a run from yesterday. We take a little bit of a longer-term look on Google shares. Okay, you just bounced back, as many of these tech companies did, back to 2021. Look at that one, right on Google shares. But yeah, similar action, man. This could be quite an acceleration Imagine if these tech stocks are at the beginning of a next A to B, and that tariff pullback could have been the C point. Google announces $250 service for AI. You check out the volume. Yeah, need to see a little bit more volume. See these numbers on Google? All right. You see this week of May 5th trading down, and look at what are we doing? Even on these news, and don't expect tomorrow to be a big day. This is a weekly. Okay, so we're going to get some volume coming in. You want to see it break higher with some momentum, man. Not less volume than the prior 2 weeks, but nonetheless, Google up by 2.5% right now. We jump over to Microsoft. On quite a run. As you see, though, volume trailing off a bit. We're coming into Memorial Day, all right? We go back to a weekly. Look at this weekly volume. We're almost at the end of the day Thursday, and all you have left is Friday volume on Memorial Day weekend. Microsoft's going to be light on a weekly. You've only done 67 million shares. Last week we did 112 million shares. Yeah, this market's light on volume right now. Look at Amazon's volume compared to the week prior. 134 million versus 277. Amazon up by 1.6% today. Nvidia up by 1.7. Jump over to some of the chip stocks. AMD shares down about 0.2%, but yeah, that was quite a breakout of that channel. We talk about some channels. TJX down about 0.5%. If you're looking to get in that equity, TJX, folks, great equity on an upward channel. Put it on your charts and look for the bottom part. TJX negative on today. Look at these Coles up by 4%, up to 812. JetBlue, we jumped some of the airlines up by 1.3%. Delta up a percentage point as well. United up by 4%. Jump over that crude market. $61.16. OPEC Plus, they're going to produce more crude. And yeah, we're in a range right now. We've been in that range since we escalated lower in the April volatility. And we got a ceiling right now near about $65. We're trading at $61.16 right now for crude. And yeah, that's the headline. The big, beautiful bill, well, it rattles. It rattles that bond market, man. This is your 30-year, right? Look at that run, man. You remember when the likes of Silicon Valley Bank, right? When they were putting all their money in 30 years at like 0%. Talk about a way to go broke quickly. Quite a rise, and do not fight that trend right now. 5% seems lofty, but with what's going on, there's no reason why the 30-year can't be at 6 or 7% in a heartbeat. Maybe Washington gets their acting gear if they do. That's what they want, because when you go out 30 years on the trajectory we're on right now, bond market wants to get paid for that risk. All right, folks, S&P's up by 29. We get the NASDAQ up by 163. Stay tuned. We'll come back, talk some equities.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We have the S&Ps up by 28 points right now. NASDAQ 100 up by 160 points. And right now, we're going to talk to our man, Tim Ward. We talk to Tim every Tuesday and Thursday, folks. If you want to reach Tim, you can reach him right at his website, which is ord-oracle.com. Tim Ward, good afternoon.
Yeah, good afternoon. Nice to speak with you.
Good to talk to you as well, man. I appreciate you coming on as always. I was listening to the program on Tuesday. Thanks for talking to Basil, of course. And, you know, we got quite a market here, Tim. I got your charts up here. I know you got them as well, but where you want to kick it off with chart one? Let's go for it, man.
Yeah, it's chart one. Actually, this is, am I running the charts or do you have
run the
them?
chart? Sure. I'm going to look at them as well, but if it's easier, you can run them. I have them up, so the producer's got two options here, so we're golden.
All right, okay. Well, the first chart is the it's a weekly SPY, and so the monthlies rule the weeklies rule the dailies rule the hours, and all the way down. And the only thing I want to point out, this last rally we had last week jumped above the previous highs. This was March 24th. This was first part of May. Then here's another high right there. But we gapped above those highs. And if you notice that there's a kind of a surge in volume, I guess. Not a huge surge, but what the point is, the volume has to be at least equal or higher than the previous highs, and that's what happened. That's what happened on this jump of last week. So this is a legitimate breakout. Now, you left a gap open, and it may fill the gap this time around, or sometimes you go down 6 months down the road and you come back and fill it. So I don't know why we're going to do it, right now. If it's going to do it, it's going to have to do it pretty quick. The reason why, the market was up, this is a weekly chart, but the market was up 6 days in a row going into Monday. That predicts the market will be higher within 5 days, 85% of the time. So that would imply next Monday we'll hit a higher, we'll start breaking to a higher high. Also, seasonality plays an important role here. Next week, starts Saturday, but Saturday's obviously, market's not open. But next week starts the sixth best week of the year according to seasonality. It's up, I forgot what percentage it was, but it's a high percentage in the high 70s. So you add that with, 6 days up in a row, along with the sixth best week of the year coming right at us next week. We're probably not going to go back down and test that gap's my point. And we may start hitting new higher highs again. So anyhow, the short-term trend is back up. it's actually been back up since first part of April. But I kind of have a hard time trying to figure out if the market was going to go back down and test the April low, which I don't think is going to happen now, since last week we gapped above some previous highs on higher volume. So I think we're going to find support at 575 is basically the worst case scenario.
This market, man. I was just going to say, even from yesterday, right? It is relentless, man. Resurgence, you cannot hold this market down. And some of those leaders especially, man, some of those tech stocks today, right? Just on fire. So not hard to see, the momentum in this market. Yeah.
You got quite a few things. The only thing, the bad thing about this is, you're going into the summer doldrums. And sometimes you get weird stuff going on. But, on an intermediate term basis, this looks strong. Worst case scenario, in my opinion, is 575. So that's the downside. The upside's probably new highs. So anyhow, this is a couple of different indicators that define the strength on the short, or actually on an intermediate term scale. I kind of came up with this indicator a few years back, and it actually works pretty well. And it's a pretty simple one, which is the bottom window, which is the NYSE advancing issues, NYSE declining issues, and just the 4-day average of it. So it's not quite a week, it's just 4 days. But if it gets up 4, in other words, there's 4 times as many issues on a 4-day average, with 400% more advancing issues and declining issues on a 4-day average is huge. That shows a sign of strength off the bottom. So in a market, you got to have a selling climax, and right after that, you have to have a buying climax. If you don't get a buying climax, you're going to get another selling climax, and you're going to get another selling climax until finally you do get a buying climax. My point is, we do have a buying climax off that April low, and it got really strong. Actually, if you look how strong this is right here, compared to this one, and compared to that one, which is 2020, you can see it's a little bit stronger compared to looks like about October 2023, and looks like about, May of 2022. This is stronger. It's not as strong as the one we had coming off the COVID crash, crash, which is the March 2020 low. It is persistent. It stayed up there, and it kept hitting up there. But we came close. So this projects that this year is probably going to be up, in my opinion, at least double digits, even though we were down, almost 18-19%. I bet we're going to end up at least 10%. So
quite a roller coaster, man.
It's
so
kind of
far.
roller coasters. So, but we got an administration in the office here in the United States. Is he's a big, in my opinion. He's pushing the market pretty hard. He's making the market very favorable for investors here. So I think that's probably the reason why some of this is really jumping up, which is, I'm all for it, because he even says he's going to have the best stock market in the history of the stock markets. And that may turn out to be true, I don't know. But what he's doing right now, even though the tariff things that he say is not a good thing for the market, internals look really good. So higher highs. We'll see some consolidations, but
these markets, man. It'd be interesting to see, Tim, what happens when we get, and not that, I think we've gotten over some of the worst fears in the market about, what could have happened in terms of tariff stick and all that stuff. You got the rebound. But it's interesting to see from the trader perspective, the volatility around, we get these 90-day pauses, right? And are we going to get a little volatility as some of those dates loom, and we're not quite sure where we're going, but we'll find out, I guess.
Yeah, I'll find out. But to me, I think this is probably going to be a V bottom. It's just straight down, straight up. I mean, we'll have some consolidation along the way, but it'll probably look similar to what happened back in 2020, when straight down, came straight back up. And I'm not seeing any signs of a top of any consequence other than fill the gap, which is 575. Actually, we can just take a look at the short-term picture here.
Sure.
This is the daily chart, and here's his 6 days up in a row right here. That predicts market will be higher within 5 days, 85% of the time. So if it's going to test that gap, it's going to have to do it probably today or tomorrow, and it doesn't look like it's going to be today. Could be tomorrow. I'm a big fan of panic. Panic is just an ideal time to buy the market. Sure. And it's very seldom you get panic. You know, you get it maybe once or twice a year. And a lot of people, say, the market's crashing. That's the best time to step in. But you got to have tools to figure out where that panic's lying. And I do, as Tom and I talked over the years, I hear the music, so we'll come back to this chart.
Hang with us. Awesome. Folks, we'll come back. We'll talk with Tim. We'll finish this conversation. We got markets. That's what I mentioned. Trading higher. Up by 29 points in the S&P. NASDAQ 100. Up almost 0.8%. Trading up 156 points. Stay tuned, folks. Tim and I are coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got markets making session highs basically right now. S&P's up by more than 0.5%, up 32 points. We got the NASDAQ 100 up 166, Dow up 224 right now. We're talking to our man Tim Ord. You can reach Tim, folks, at ord-oracle.com. All right, Tim, let's keep it going.
Yeah, all right. Back in April, we had a trend close of 1.47 with 181 downtick readings. Trend closes above 1.2 show panic, and those are the type of readings found near lows. Previous declines always had ticks at least minus 300 to really signal a bottom. For this type of market, we're bottoming around minus 200. So that's the reason why I didn't take this signal back in April when we had 181 downtick readings. But it worked out fine. Went up. This one I probably should have taken. We had 1.3 trend and 210 downtick reading. But I did take this one up here. We had 1.39 on the trend and 243 downtick readings. So I'm long on this day right here. Markets kind of come back, maybe temp test this. But anyhow, we got quite a bit of support. We have a legitimate breakout above the previous highs. We have a gap. Trends up. We got 6 days up in a row going into Monday of this week. Market has pulled back a little bit, but expect higher. And next week is one of the most favorable weeks of the year. Has a rally started? Maybe. We'll have to wait and see. But either way, if it doesn't start this week, most likely it's going to start next week. Monday is a holiday. I forgot about that. So
yeah.
If the rally starts, it'll be Tuesday. But anyhow, the S&Ps on actually an intermediate-term scale look fine. There'll be some up and down, but nothing. My opinion, there will be no attempt to test the April 7th low. The bottom's in. The rally will continue. Won't go straight up, but it'll do well this year. I think you'll still see double digits this year, but could get a little messy during the summer, especially around that July period. But it looks good. So that's my take on that market.
They're all lining up, it seems, right, Tim?
It's you should be long.
They're all lining up. I hear you. Let's keep rocking. No, hey, you can't deny it, man. We were just at 6,000 in the S&Ps. These markets are relentless, without a doubt.
Yeah, and Trump's kind of probably behind the scenes helping this market out, but the market's paying attention, so it's doing what most investors want it to do. We can flip to the gold market real quick.
Please.
Okay, this is the top window's GDX. Bottom window this is a monthly chart. This is a monthly up-down volume. Actually, it's a cumulative up-down volume with a Bollinger Band on it. Next window higher is a cumulative advanced decline with a Bollinger Band on it. And the top window is GDX. In general, I got the greens and the pinks on this chart. When it's green, both indicators, the bottom two indicators, are above the mid-Bollinger Band, and when it's pink, both indicators are below the mid-Bollinger Band. And so you can see the rise and fall of the market. And it gave a bicycle basically back in early 2024 as both the cumulative advanced decline, cumulative up-down volume crossed above the mid-Bollinger Band. So you got a lot of force. You got advanced decline pushing higher, making higher highs, making higher lows, and you got up volume exceeding down volume, making higher highs, higher lows. That's the definition of a bull market. And so this will keep in a bull market until both those indicators fall below the mid-Bollinger Band. And as you can see right now, this chart's a couple hours old, but both indicators on the monthly charts are still making higher highs. So trends up. How high is up? I don't know until both those indicators fall below the mid-Bollinger Band. And when that's going to happen, most of these indicators of this type last at least a year, and we've been into at least a year already. We're pretty close to actually a little year, but they can last 3-4 years.
Sure.
If you look at the pinks, the one back in 2012 gave a signal back in 2012 and finally gave a bicycle in 2016, the last 4 years.
Yeah.
But anyhow, it's back on a buy. I think this this bull market actually has a lot of similarities to what happened in 2000. So, and that bull market lasted 12 years. So we'll see if that develops or not. But
okay,
it's good. It's good. I'm actually kind of not full-fledged bullish right here, right now. But the monthly charts ruled the weeklies, and weeklies rule the dailies, and this is a daily chart. And what I'm calling for here is probably a pullback back down to 39. The pattern forming here is 3 drives to the top pattern, and what this pattern is, off the second top, the market must retrace at least 61.8% of the previous up move, which it did, and volume has to increase, which it did. He had a selling climax, actually, if you look on this day right there. Then the market goes up, makes a higher high, and that higher high is the third top. That's the one you should get out on, because what the market predicts, it'll pull back all the way back down to where the pattern began, which is back around 39. On a short-term basis here, we're running into a gap. If you notice, that gap had huge volume, which is right here. So you're running into that gap on lighter volume. And if a gap was tested on equal volume, that gap will exceed it. If it's tested on at least 10% lighter volume, well, we're hitting the gap on about 30% lighter volume. So that gap, can it fill it? Maybe. Maybe it will, maybe it won't, but it's almost filled right now. And it may take a couple more days to get up there and fill it, or it may just start turning around now. But that gap is resistance because the volume is not there to push through the gap. So once this thing decides to turn back down, I think we're probably heading back to 39. And it's kind of hard to tell where the next low will be in time, but I think we'll probably come around the July 4th time frame, just because gold seasonality-wise seems to kind of top and bottom around that July 4th time frame. So we'll see if that's the case. I'm in the market. The big ones are the ones probably going to correct here, not the small ones. The small ones I'm looking, I mean, we're talking about the 5, 10, 20, 30, 40, 50 cent stocks, are actually a lot of volume are starting to go into those, and those are the ones I'm kind of actually still picking up right now. I did sell some of my bigger ones. I kept some. I kept a partial position in them. I didn't sell them out totally because I think we're in a massive bull market. So I don't want to step out completely up.
No, don't miss it if that's where we are, right? I hear you.
Yeah,
Markets and gold.
But
Tim, I was just going to say, I appreciate it so much, man, going through those charts. And boy, we got quite the market. And hey, this gold market, man, it's been quite a consolidation, right?
I got one more chart if you want to.
Sure, let's come back. Perfect, let's do it. We'll come back, folks. We'll finish it up. He's got one more chart. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leverage and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Markets in the positive, but giving back a little bit of those gains. S&P's up by 21 points right now. We got a little bit of selling coming into the closing bell, down about 10 points from those highs we made. Coming into 3 o'clock, we're talking to our man Tim Ord, and we're talking a little bit of GDX. Go for it, Tim.
All right, GDX, this is the last chart, but the bottom window is the 18-day average of the up-down volume. It's different from that first chart I spent on the monthly chart, which is a cumulative advanced decline and a cumulative up-down volume. This is an 18-day average of the up-down volume and 18-day average of advanced decline. So it's a little bit different spin I'm putting on those two indicators. And what they're good for is actually showing divergence. If you notice, going into the high, if you look there, both those two indicators made lower highs as the GDX made higher highs. So that was kind of a heads up that this 3 drives to a top pattern is probably going to work. Well, here we're making higher lows compared to the April low on the current setup. And if you notice, both indicators are making lower lows. So
yeah,
I'm not bearish here. It's just this market just needs a consolidation to actually build some strength to get the next rally going. Is all I'm saying. So
yeah,
and it's not a huge decline. It's just, matter of fact, 3 drives to a top pattern, according to the book, is a pattern that is a timeout and an uptrend. So you'll see these go in a market. They come back, they scare everybody. You know, the weekends get out, then the market resumes up. It's probably what's going to happen here. But even though we've been rallying here over the last week, we have a big divergence in the 18-day average, and because they made both of them made lower lows, where the GDX made higher lows. So I'm thinking we're probably going to stop around this gap area in that vicinity, then probably turn back down again. And again, I think it's probably July. We got another month of kind of up and down, kind of probably a little bit difficult trading GDX, I would think. So, but anyhow, I always wanted to put that out there. I'm not a big bear, but I got a couple of different indicators do suggest that a pullback is likely on the daily, and that's all I'm saying. So, bigger trends up, short-term trend, maybe a July 4th.
And I thank you for going through it all. Hey, do you ever look at the dollar or the currencies? I'm just curious, because the dollar's had some action. You're at 100, and I didn't know if you take a look at that at all, if you had any opinions on that, as, obviously with currencies, gold. Do you look at those at all, Tim?
No, actually, I don't.
Okay.
A lot of people ask me questions about it, and basically I'm not qualified to really answer intelligent questions about it. Because
no worries, I was just wondering how we got a lot going on.
Yeah, a lot of people look at
what about yields? Do you got any take on the yield conversation, man? I love that we're just talking technicals here, folks, and that's the bottom line.
Actually, I do a yield against the equity market. And I put an RSI. The weeklies work really well. I do a SPX tilt rate, or I forgot what the symbol is for it, but I do a SPX yield, then I do an RSI on it. And when the equity market gets too strong compared to what the yield's doing, you're getting overbought. That's a very sign. And then vice versa. If the yields are way outperforming the SPX, that's usually a bullish sign. So I do use that indicator. It works best on the weekly. Actually, on the next show, I'll present that. Show it to you. So
cool. Yeah. I mean, we got quite the conversation around yields, of course, and as they drive the dollar and as they drive gold sometimes. But I appreciate it. Well, Tim, I appreciate the time as always, man. Some great information for me, for the guests, and we look forward to talking to you next Tuesday. Have a great Memorial Day, man.
All right. Thanks a lot.
Thanks so much. Folks, check them out, or-oracle.com. And yeah, those ratios, right? And if you're into it, folks, we got webinars right under the services tab under TFNN.com, man. Check it out. Head on over to the services tab. When we talk about those ratios, folks, you'll see it. Okay? There it is. 6 secret ratios every trader should know. Only $149. Outstanding webinar with Tim. And the secret science of market tops. How to identify market tops. He's not calling for a market top right now, though. Yeah, some great analysis, as always. All right, we jump back to these markets. All right, we're giving it up a little bit here. All right, quite the acceleration. We got about 13 minutes to go in trading, and the S&Ps are right back to where we were at about 7 a.m. this morning after a little bit of a roller coaster, but we're in positive territory across the board right now. Google gives it back a bit, the leaders. NVIDIA still up by more than a percentage point. Microsoft right now up by 2/3. Yeah, Amazon up 1.25% right now. And you jump to, so the news out there, of course, OpenAI, they scoop up Apple designer Johnny Ives, and then you got, Apple saying, we got to get some press out there, right? Apple plans glasses for 2026 as part of the AI push. They nixed the watch with a camera. They can't figure it out. They're a little lost right now, I think. Right? They're not sure what people want, what to do, how to make it happen. I've tried the Meta glasses in Target. They're pretty cool. They are. Now, are they cool enough to be spending hundreds of dollars all the time? They've sold 2 million pairs of them. Yeah. And the Meta's Ray-Bans, I don't know. You're going to need more than that, man. Right? As they try and combat Apple. They're coming for you, Apple. Now, what's amazing is you get Google on the good run it has yesterday, and then you get this article right here coming out today that Google faces antitrust investigation over a deal for AI-fueled chatbots. Okay? Alphabet's agreement to use AI tech of a popular chatbot maker. They've told Google they're examining whether it's structured an agreement with the company, Character.ai, to avoid formal government merger scrutiny. Right? The founders of the chatbot maker joined the search firm and got a non-exclusive license to use their venture's technology. Sounds like a sidestep to buy the company. Efficient way for companies to bring in expertise for new projects. However, they've also caught the attention of regulators. Now, that's not going to be the end-all. Character.ai. And that's what happens. But you see it with OpenAI. They're buying Johnny Ives' company. But nonetheless, Justice Department looking into Google. Under its deal with Google, existing Character.ai investors were to see shares bought out at a price that would translate $2.5 billion for the company. Not bad. And then you get a non-exclusive. Sounds like a way to buy the company without going through buying the company. Yeah, this is what I want to get to. Here we go. So Universal. What's it cost to build a nice theme park these days? $7 billion. You want to get in the theme park business? Raise $7 billion. You can build a theme park. Epic Universe. Yeah, it's the first new theme park in like 20 years. That's what they talk about here. I'll post this one in the Tiger's Den. It's just interesting. But yeah, $7 billion in Orlando. And, Florida gets a lot of grief, folks. But, man, we got it made when it comes to getting all these perks that are right near us that we get to use 12 months a year. And they only exist because of tourists, right? Stay tuned, folks. We'll come back. We'll talk some of these. Yeah, with Comcast.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the markets selling off a bit. S&P's up by 10. All the markets in the green, but we got a little sell-off going. We jump over to Comcast, down by 1.2%. We take a look at this thing now. So what we're talking about is Universal builds a new $7 billion park, okay? And it has been about a couple decades since they had a new big one here. And forgive me as I lost the line. Here we go. All right. It was talking about just 20 years was the part I was talking about here. But the part that's most interesting is Disney might lose market share. Okay, they control a huge portion of everything, obviously, to state the least. But you're talking about Disney, 49 million visitors in 2023. Disney, okay, it represents a much larger portion of their revenue versus Comcast. You're only talking about 6% of the company's overall revenue. Comcast took in when you're talking about parks, okay? You get down to Disney, a third of the company's total revenue is parks. It's almost surprising only, right? Disney, 49 million visitors in 2023. Universal, only 20 million. And Disney execs have said the addition of Epic Universe to Orlando may be good for all the parks. Because even if they lose market share, more people are going to come to Orlando when you got a big new park like that. Universal is trying to say, hey, you can spend a whole week at Universal without going to Disney. I don't think that's the case. I don't think that's the case. I'll tell you, as somebody myself, I haven't been to Disney. I haven't been to Universal. Where are we going first? I think we're going to Disney, but guess what? Tommy loves Super Mario Brothers, and one of those Epic Universe parks is Super Mario World. They got Harry Potter in there as well. And just like that, we do get selling. S&Ps, we're going into the red right now. We got selling into the close, folks. Stay tuned. I'm coming back for the top of the hour, and I'll see you tomorrow morning at 9 o'clock. Thanks so much, folks. Have a great day.
Building wealth trading in